Welcome to Training the Newbie, the podcast where we explore what happens when two worlds collide. I'm your host, Bill, and in this series, I'm taking on a bold challenge, training someone from the halls of academia, a professor with a rich background in leadership and entrepreneurship, to navigate the fast-paced, high-stakes world of Forex trading. It's a journey of transformation, uncertainty and insight, where theory meets practice and strategy meets screen time. Whether you're a teacher, an artist, a coder, or just someone who's curious about making your money work smarter, this show is for you, because if a seasoned academic can step into the Forex arena and learn to read the markets like a pro, why not you? Let's dive in. So we're going to focus on these four things here: software, the instrument, time frame, and paper trading. This is the tactical part of trading. This is basically what I do with everyone, is get them set up on a charting package so that they can start to practice, basically. You don't need any money to do this. This shit's all free, okay? Don't worry about that. I'm going to give you a little bit of a guided tour of the software first. Then I'm going to talk about the different currency pairs that are available, and then maybe recommend a few that you start with. Talk a little bit about time frame that you might want to trade in, and then talk about paper trading. All right, so this is just a basic chart with nothing on it except the bars. This is Trading View. I'll just go through this semi-methodically. Can you see that red dot really good? I'm always never sure if people can see that or not. So we'll start up in the left-hand corner here at the top margin here. This is the area that defines the time frames that you want to look at. You can set your favorites here. These are mine: 1 minute, 3 minute, 5 minute, 15, 31, 1 hour, 4 hour, daily, weekly, monthly. When you click on this little guy down here, it gives you all the different ones that are available for you to trade in. I just starred the ones that I like, so that those pop up there and I can just flip between those. You can always tell what time frame you're on by looking right here.
Yeah.
That's the interval. So if I want to go to a 1 hour chart, I just click on 1. If I want to go to a 4 hour chart, I click on 4, daily, etc. Then there's the style of the chart that you use. This is a candlestick chart. These are bar charts. These were the traditional charts that go all the way back to when people used to look at stock prices in the newspaper. It's the same idea as the candle. The green candles are going up. The open is this little dash right here. The close is this little dash right here. And then you have the low, which is the wick here, and the high there. And then the same thing here, except this is a red bar. So prices closed to the downside, opened here, closed here, went all over the place all day. There was the high, there was the low, but it actually opened and closed within a few pips of each other.
Yeah.
So that's how you read those. Those are the two most frequently used. You can have hollow candles. The only difference there is the green candles are going up, but they're hollow, and the down candles are filled in red and they're going down. Some people just like it visually better. You can see the difference. Okay. If I use candles, these are the ones that I use. It's just easier to distinguish that. This is all personal preference, right? You have the ability to do volume candles. So if you wanted to see how volume affects price, obviously the fatter candles have high volume and the skinny candles have hardly any volume. So you can see that very visually, very quickly. Line charts, this is like my favorite, because all you're seeing is the open and the close of each one, and then the line just extends between the opens and the closes. For me, I like less clutter on a chart. So this is my preferred way to look at price.
Just because of the clutter, you don't mind giving up that extra information about the wicks and things?
Not really, because my code is capturing all that information, so I don't have to visually remember it all. You can get it with dots also. The dots are the opens and the closes. So if you wanted to see exactly where that is, you could do that. A step line I've never used, but some people, you'll see these kind of charts maybe like in some kind of financial publication. I've seen this kind of chart used in those, but that's really the only place. I'm going to stick to just plain old candles. for the purposes of this course, because that's what if you go out and try to watch videos and stuff like that, pretty much everybody uses a candlestick chart. So that's what that's all about. All your indicators are right here where it says indicators. You can mark favorite indicators that you like. I have a bunch of ones that I've written. I just have like maybe a half dozen that I use all the time. I've written all of these myself, and I will talk about Pine Script at the end. And that's good. I'm glad you brought that up because I didn't think of that. This guy right here allows you to save little templates, which is cool. So if you set up a chart and you want certain indicators on it and you're always going to use it over and over again, you can save all of those indicators into a template. And then all you have to do is to click on one of these and it will throw all that stuff on your chart. So if I wanted to bring up one of mine, I just click on that. It's going to go through and do all that stuff. And then all my indicators just popped up on the chart. See?
Got it. Yep.
So that's nice to have. Now let me delete all these. So we're back to
Well, that little thing on the left just tells you what's live, basically, like what overlays are live.
this is the alert. You can set an alert on any chart. There's a bunch of canned ones in here that you can just use where it's prices crossing one way or the other or up or down or entering a channel or whatever, all this stuff. I don't, mine are custom to my indicators. So when you create an indicator and you code an alert into it, it will show up in this information screen and then you can select it and then your own custom alerts will come up during
Hmm.
that. This is the replay button. I'm going to show you that at the end. This is where you save your files. Okay. So you got a little pull down. I have a bunch of different, I guess, charting screens that I use. So I've named them all. You
Hmm.
can have it auto save. You can share I don't share my indicators because I've copywritten my indicators and I only share them with my clients. A lot of people will communicate on here. Socially, they will share information, they will share indicators, all that kind of stuff. Over here on the left are drawing tools. So you see me click on this one. This is the one that gives me the red dot. I can make it just a regular dot so you could see it that way too. These are drawing indicators. You can draw trend lines, parallel channels, all kinds of. You'll find all of these things in that technical analysis book. You'll see a lot of the different trend lines, regression panels, parallel channels, all that kind of stuff's in there. They haven't broken out by category. This one here has to do with all the Fibonacci retracements. So if I wanted to do a Fibonacci retracement, I would click there. I would pick a low point and a high point, and it automatically puts those fibs on the chart for me. This is also a pretty popular indicator for some people. You're familiar with Fibonacci, right?
Yeah.
The mathematician. The golden rule is right around 0.618 is where they say price should reverse. It's actually in this little range right here. So if you pick a low point and a high point, that's where price should reverse. And in this particular case, it did. Like any other indicator, you can use it to trade, but it's not right 100% of the time. That is the one thing that people make a big mistake with very frequently. So if I did a fib retracement in the other direction, I would go from a high to a low point right here. And once again, so you would place the fib here. This hadn't happened yet. So when price got up into the golden zone, that's where you would short and go down. Make sense? See, prices were trending down to come back up. This is the
But
golden zone. So this is the zone where you would go short again. You would go back to
oh,
the trend.
okay. So it's
It's
not that
just
you
the
take the low
opposite
point
of,
and go up.
yeah, it's the opposite of the one I showed you before. Here, I'll put them both on there so you can see them
Oh, I
side by
thought you
side.
grabbed the same. What
Yeah.
was the first one called?
They're both Fibonacci
Oh, okay.
retracements. So here price is trending up. That's the high point. When it comes back down into this area, the golden zone, you would go long. And then this one, I started at the high here and went to the low here. So this retraced back up to the golden zone and then started to go back down.
But then it doesn't tell you where to get out.
No, it does not.
Yeah.
That's up to you. Where that's all part of your trading plan and your trading rules thing.
Huh.
That one's all fibs. This one has a lot to do with Elliott waves. Elliott wave, there's this mathematician, I think he's a mathematician, or I don't remember what he was. He's either a trader or a mathematician. So his theory was that price goes in these waves up to 5 waves, and you can semi-predict the direction price is going to go based on knowing where it is in that wave cycle. Just another, I never use these. This falls into the category of, okay, it's getting way too complicated.
Yeah.
Trying to figure out where wave one is, wave two, wave three, wave four. But some people are like diehard Elliott wave traders and they do that. So if I wanted to just draw something on the chart, I can put a great big giant arrow on there, or they have smaller arrows, so I can do something like that.
And why would you do this?
You're trying to identify the trend. You're just visually, oh, look, it's going up, the thing. Which way is the trend going? It looks like the trend's going right here. It looks like it's going up. For some people, it's just a visual cue that makes it easier for them to see what's going on in the chart. As you get more experience, you'll be able to do this without any kind of indicators. That's what I was talking about, like the naked trading thing. You can just kind of guess. If I was to look at this chart and try to tell you where the trend line was, I would say there are several trends on this chart. Okay, so here's a trend line. If I just take a plain old trend line, I would say there's a trend going down. That's pretty obvious, right? But there's also a trend, a short-term trend going up right here. All right, so you could draw two lines like that. And you could say you decide which trend line you want to trade. Okay. So if I wanted to trade the down trend line, that means I would go short and I would stay in this trade short as long as this line wasn't violated. So as long as the highs came up to the line, maybe touched the line, but never really closed above the line, I would just stay in a short position. If I was trading in a shorter time frame, I would say, oh, the trend is up right now. So I would stay long in this position as long as the lows didn't violate this line. Does that
Hmm.
make logical sense? That's why two different people can look at the same chart and come up with completely different analysis. Okay, yeah.
So, like in this case, maybe we've talked about this before. Would it ever then make sense if you had a person that was doing this,
Uh-huh.
that maybe, I don't know how early they would establish this line. Maybe it would be more, the slope would be more intense. Like pretend they didn't, like going back to where the D is in US CAD there.
Okay.
If you had you were right about there and you went from the peak down to whatever the high is there, the slope would be more tilted, right?
Correct. I could literally have this line right here.
Yeah, that's kind of what I mean. So then if you did the same orthogonal line, intersectional line that you had at the far right,
Uh-huh.
you had that same idea. Would it ever make sense to, I don't know, it's kind of like that dollar cost averaging thing you were talking about. Every time it hit the peak and didn't violate, if you took a short
Yeah, absolutely.
and then like you just keep chewing it down, and
Yep.
then
Yep.
if it ever violated it, then maybe you clear out all of them.
So let's say you originally got in the trade here when it first touched the line, right?
Yeah.
And then every time it touched the line, you put more position on and you just kept getting bigger and bigger. And then right here is where you would have got out of the trade.
Yeah. And that'd be pretty good, right?
That'd be
Yeah.
great. But it's much easier said than done.
Yeah.
Yeah.
But I'm just trying to begin to build these heuristics in my head here.
I'll show you when I show you the paper trader. We'll try that as a little thought experiment.
And when you're doing the simulations, can you speed up time or do you actually have to sit?
Absolutely. Really slow or really fast.
Yeah,
And
okay.
there's a caveat I will give you there is the way that thing works is there's a little bit of a what do I want to call it? It skews it a little bit because it shows you it prints every time a bar finishes. So depending on what time frame you're in, you don't get all those little subtleties like you do when you're actually really trading. You're in a bar and price is going up and down and up and down in the bar, and then it finally closes and moves on to the next bar. You'll see
Yeah.
it when I run it. It makes it a little harder to simulate reality, if that makes sense.
Yeah. Makes sense.
There's two ways you can do it. You can use this replay feature, which is really nice for practicing on, or you could just open up. They have a paper trading account in here with a phony $100,000 in it, and you can trade during the day while prices are really happening and practice without losing any money. Okay. I mostly use the replay function when I'm testing out my indicators because it's really good for that kind of stuff. So we were over there. These are all the drawings. So we were at the this one right here. This is just all if you want to put text or notes on the chart, that's what all these are all about. This guy's pretty useful because this is a measuring tool. It's like a little ruler. So if I wanted to see how many pips it was from the high of there to the low of here, that's negative 651 pips. Okay, that's over 9 bars, 11 days because I'm on the daily chart. So it has some basic information and it gives you some volume information there too. So if you ever wanted to measure how far price is going in a particular time period, you can use this tool for that. The magnet tool, oh, this is just a zoom tool, self-explanatory. You've seen me use that a few times. When you click it, you just grab the corners you want to zoom in on. It'll automatically zoom real fast. And then we click the minus, it takes you back to where you were. The magnet tool, this is useful when you're trying to set up a trend. So if I turn the magnet on, it's going to stick to the close or the highs and the lows, wherever I want it to stick to automatically for me. That gives you a little bit more of a precise trend line when you're playing with that. If I turn the magnet off, then I can put this pretty much anywhere I want and it won't care.
Yep.
If you want to save your drawings, there's a file system here. Some people write copious notes on these charts and save all their notes right on the chart. Remember, I was telling you that it's a good practice to create a ledger or diary of your trades and just kind of do that. Some people just like to do that electronically, so they just do it right here. You can put any kind of notes or diagrams or whatever you want on the chart. You can lock the chart so you can't change it. And that's what this is all about. So you don't accidentally delete something that was important to you. Here, if you have open positions on your chart, you can hide those positions in order so that other people can't see them. Because some people use these charts when they're running their trading room and stuff, so they don't necessarily want people to see their account number and all that junk on the screen while they're broadcasting. So that's what that's all about. If I hit this little globe, I might have multiple. See these tabs up here? These are all different charts that I have. So I might have multiple charts open. And if I draw something on this chart and I want to see it on every chart that I have open, I would click on this little globe and it would synchronize all the charts together, which is a nice little feature. This is a trash can.
And just real quick, that applies all the indicators to whatever's here. It gets applied to all the other charts.
Correct. It will get applied to all the other charts that you have out there that are open. Trash can if you want to just get rid of whatever you drew real fast. And then this little star thing, you can create a template. See this little template up here? I have a template of frequently used drawing tools. So if I want to use these things over and over again, I have them up there really fast. And if I don't want to see those, I can turn that off and then I can just delete that and it goes away.
Got it.
Okay. Let's talk about instruments. All right. So over here on the right in this sort of gutter here are all of the different instruments that you could possibly trade. So I only use a few, but I'll show you there are literally a ton of them. TradingView gives you a whole slew of different instruments that you can use. These are all the Forex currency pairs. So you can select whatever you like to trade here. Now, and you can make little lists.
The Aussie dollar and the Ethiopian real.
Oh, yeah, there's a boatload of them here. And that's not even actually all of them. You can add, there's some real weird ones here. This is, my broker is called Owanda, and we'll talk about that next week. But you can see I trade more of the normal ones. There's some really weird ones in here. The pound ZAR, I don't even know what that is. That might be an African currency or something like that.
Looks like, yeah, South Africa.
Yeah, Aussie dollar and the HKD. I have no clue what that is.
Hong Kong dollar, maybe.
Yeah. So there's a ton of currencies that you can pick from. Now, what I have done is I've created little lists of them. These are the top 8. These are like the ones that everybody trades. The reason people trade these things is because they have high volumes during the day. That's what you want. You want instruments that trade with very high volumes so that you can get in and out of trades easily. And then I have further refined them down to these 4 because these 4 work really good with my indicators. So there's an interesting thing about a instrument is that they have personalities and you got to learn that personality when you're trading them. So for example, the Euro USD is the highest traded pair on the planet. It has extremely high volume, it has extremely high liquidity. The issue that I have with it is because everybody on the planet trades it, it's really hard to trade. Everybody's trying to do the same thing, right? They're trying to come up with a strategy and trying to. So if you decide, oh, I'm going to do Fibonacci's, right? Well, there's probably 10 trillion people doing Fibonacci's. And then there's another 10 trillion people that know 10 trillion people are using Fibonacci. So they use a counter strategy to that, right? So price ends up going all over the place and it's really hard to trade on those highly traded instruments. So I tried to pick four that aren't as highly traded, still have all the characteristics of volume and all that good stuff, but behave well. And for me, those are the US dollar Canadian dollar, US dollar Swiss franc, and the British pound US dollar. Those four trade real nice for me, and I really like them. So that's what I use when I trade those.
Got it.
All right. Have you thought about what time frame you're thinking about trading at all?
No, I still need some. Yeah, I guess I was thinking a little bit about waiting to get the feel for it, but
That's what I would say start with the 15-minute time frame. Okay, and then trade like between 8 a.m. and 10 a.m. in the morning, because that's like the London and US overlap time frame. So you've got two giant markets that are overlapping. People both in Europe and in the United States are trading currencies. So you have the maximum amount of humans. You're going to get your best results when it's humans trading and not computers. Because when computers kick in at 10:30, 11, it turns into a Pong game. They're programmed to just trade with each other in a very orderly fashion. So you'll get in a trade and then they'll sell it and they'll buy it. I call it Pong trading. It just goes back and forth and back and forth. And it's very hard to make money during those times. But when humans are in there and you have all that emotion and you got the news and you got all kinds of stuff going on in the world, it's much easier to trade. Okay. So let me talk about the replay feature. We're in a 15-minute chart. Let's pick the US Canadian dollar. Let's zoom out a little bit so I can get a better feel for trend. So I would hit the replay button. I'm ready to trade. Then I'm going to hit this button down here. It's called random. That's going to take me to a random bar on the charts. You can also go to a specific date or a specific bar, but I like random because there's no way for me to figure out what that is going to be.
You can't bias it or whatever.
Right. I can't bias my trading. So I'm going to ask you a question. If you were trading this, what would you say the trend is right now?
Down.
Very good. Okay, so let's draw a trend line on here. We'll draw a trend line from, where do you want to draw it? From here or from here?
I have no idea. What's the?
Let's do that.
Why wouldn't you do it from the top? Because it was so dramatic?
Just the amount of time.
Oh, how many? Oh,
this is trading. Because these are 15-minute bars. So you're probably looking at, this is Friday, Saturday, Sunday, a little bit into Monday, just this little chunk I'm pointing to right there.
Okay.
So then here you can select how fast or slow it plays. I have it change up every half second, roughly, or I could go slower. And then this is your play button. This is your step button. This is your go to the end and start over button kind of.
What does a step mean in this case?
It just prints one bar.
Oh, just per bar. Okay.
Yeah. See, if I click that, you'll see another bar paint right there. See that?
Yeah.
Okay.
Are you an active trader looking to elevate your trading skills? We invite you to join the Trade Faction, a community where you can witness trades called out live. To connect with fellow traders and gain real-time insights, simply click the link in the description or scan the QR code to join our free Slack channel. This is a great opportunity to enhance your trading strategies and stay ahead of the market. Also, don't forget to download our new Forex AI Sage app in the Apple App Store to use the latest in agentic AI to help you trade. So what are you waiting for? Click that link or scan the QR code now and download the app today.
It's trending down. Which way do you want to place the trade?
So the latest one was that big drop then, right?
Correct. I could do another one if you want
Sure. Keep going.
to. Up another one.
I suppose it would be to short it if that case.
Okay, good. All right, so we're going to short it right there. All right. So I'm in a position 50,000. This is a little weird. It was weird for me to first figure out what you're doing. You're given margin by the brokerage company, and usually it's 50 to 1. So however much money you put in the account, you can buy 50 times that amount. So if I put $1,000 in an account, I can buy $50,000 worth of USD CAD currency. Okay.
You mean if you put in 5,000 or whatever?
Yeah,
What did you say?
5,000. Yeah, you're right. I'm sorry, 5,000. Right. No, wait. If I put in $1,000, you have 50 times leverage.
Oh, yeah, yeah. Put in 1,000.
I can buy up to $50,000 worth of this currency because I have 50 times leverage.
Got it.
So I just put a position on for $50,000 worth of US CAD, and I'm hoping that price goes down. So what I would do here is I can just step through this, and this would be a really good place for you to put your stop loss in. Where would you want to put your stop loss in? This is your parachute. This is I screwed up. I need to
Get out.
Yes.
Maybe at the top of the last high, or should it be
Perfect.
below that?
You're smarter than you think. That's where I would put my stop loss initially. All right. So at $50,000 worth of this currency, I'm risking $84.50. Now,
What did you click to set that? Like, how
these
did you?
little tabs here,
Oh, yeah, you just dragged it
I
up
just dragged it up there.
there. Okay.
Now you could, at this point, either set a profit target. That's what TP is.
Oh,
Right.
take profit. Yeah.
This is reverse my position that a lot of people like to trade like that. They'll trade in one direction, and when the trend changes, they just reverse the position. That's faster than flattening the position and then re-establishing a new position. Okay.
Right.
It's all about speed. When
But so in the case of when you hit flip or what do you say reverse, that closes your last one and opens a
closes
new
the
one?
last one and
Okay,
flips
right.
you into the next one in the opposite direction.
Gotcha.
So we go to the next bar. All right, you did good so far, Will. You made 62 bucks.
Stop.
Stop. You can stop right now if you want to. Yes, you can. All right, so your trend line's still here, right? And trend was going down, so you just jumped in short and you're
Yep.
up 62 bucks as of that bar. The bars are 15 minutes long.
Yep.
Okay. So what do you want to do? You want to keep going or you want to get out?
No, I want to keep on to try this
Okay. All right.
cost averaging situation.
All right. So now we go to the next bar. It still moved a little bit.
Just a tad.
Just a
Okay.
tad. One more.
And so let's see, where does the volume indicator in this case?
It doesn't
Or we don't have one.
does not show. I think I could turn it on, but it's irrelevant at this.
Okay. Oh, is it?
Hang on. Volume.
I thought you were saying volume matters.
It is actually important. That's why I throw it on there. Okay, cool. I can throw it on there. Okay, so there's your volume.
All right. So in this case, price barely moved. The high end closed, but it was relatively high volume, right?
Correct.
So that suggests maybe a real bottom, maybe.
Correct.
So the flip thing closes out the one that I had, but I don't necessarily, in this case, again, just making up the strategy as I go. Can I open a new one here and go long?
Yes, but not in this simulator. What you're talking about is you would have to close this one and then we could open a long one if you want.
You can only ever have one open on the.
Correct. And that's because of regulations in the United States. Now, I'm actually glad you brought that up because there's one strategy I didn't show you. It's called hedging, but it's tricky because when you hedge, you simultaneously put on a position in both directions. Now, they can do that over in Europe, but you can't do it in the United States. But you sort
Why
of
not?
can. The tricky part is you would have to have two accounts, all right? And you would put your long position in one account and you would put your short position in the other account. The reason I say it's tricky is because when you're in the heat of battle, bouncing between two accounts like that,
Yeah.
kind of a pain in the ass. Now, the reason that I use Owanda is you can take your kitty of money in Owanda and break it up into separate sub accounts. So I could have a long sub account and a short sub account, and you can do that in one brokerage account. But I would have to have two tabs, one tab open for my long position and one tab open for my short position. in TradingView and be bouncing in back and forth between those tabs.
And why do they have this regulation? I don't understand.
Because they they do everything to make it difficult for you to make money. That's my opinion. Honestly, I don't know the answer to that question, why they won't let you do that. Because if you truly have a balanced position on, you just stay at net zero. And that's the tricky part of hedging. You have to know when to take one position off.
But isn't it similar? And again, I don't know much about these, but like all these, what are they called? Not
Straddles?
yeah, straddling positions. Yeah.
Yes, it's exactly like a straddle. Yes.
So it's allowed in options, but not in Forex?
It's not allowed. It's not allowed in stocks. It's the only place you could do it is in options.
Oh, so
Yeah.
you can't actually buy the real security and do it. You can only
Correct.
do it through options.
Only through a derivative.
Huh,
So,
okay.
yeah. What do you want to do?
Oh, yeah. Hamstrung by the US government again. Let's see. How about we close it and then just wait? And then I'll wait for it to
All right.
go back up and see if it breaches. Yeah, so give me some
Okay.
money.
You closed it. You
Yeah.
made $66. Okay. Let me.
Oh, feeling it.
All right. So now I'll just hit play. So we'll just see what it does on its own here.
Oh, interesting.
And
Okay.
there's the big volume bar going in the other direction.
Okay, here, all right, here. So,
Okay.
oh, it was a little slow on the click there, Bill.
Yeah.
Costing me pips here.
All right. He's already hooked.
I'll do another sell here.
You want to sell? Okay.
Yeah,
All right. We'll sell here.
because that's the play here, right? That's what we're doing.
Right now it is. Yes. All
Yeah.
right. One more bar. Another bar.
Oh, do we need to set a?
Oh, you want stop loss?
Yeah, give me a little
Where do you want
stoppy. Just slightly at the top of the red there. No, down. Yeah, right. Yeah, right there's good.
Okay, cool. All right.
Bill, you promised me I'd always make money. No, I'm just kidding.
Never promised anyone that.
I'm teasing. I'm just teasing.
I promised you it was hard. That's the only thing I promised.
Yeah.
All right, you got stopped out. You still got $25.
Okay.
So now what do you want to do?
So it's breached our little line.
Yep.
So
Violated the trend. It's actually closed above the trend.
yeah. I'm not smart. I don't know yet. I don't know what the.
Most people would either sit and wait and see what it's going to continue to do, or they would go long here just because the trend was violated.
Give me that. I'll take long. We'll just
Take a long. All right, so then let's change the trend line or add another one so we can see. And we'll go from here to here.
Is that a low to a low? Or what are you doing there?
Yeah, a low to a low.
Are you just drawing that? Or
Yeah,
it's not actually connected.
So then we could put your stop loss like right-ish, and we can get rid of this one so we don't get confused. And we'll do the same exercise. And right here, you hit your stop. Very first bar.
And that's just because it took a dip. It didn't actually.
Correct.
So yeah, the
But it hit the
candle
stop.
length.
Yep. So what do you want to do?
So in this case, like I guess when it has a slightly lateral near-term move, do you want your stops to be wider margin? Is that smarter in this case because these candle volatilities could get you?
What style are you trading? Are you trend trading? Are you regression trading? Are you doing both? This is why I'm having you do this, is because I'm getting your brain to adapt to what's going on the screen. So if it was me, when I saw this, it's going sideways to me. I would do nothing. I would do nothing.
All right.
Okay. So you want to just let it play for a little while, see what it does?
Sure.
All right. So now here's the frustrating part, because it appears to have resumed the previous downtrend.
Yeah.
So this is the mind stuff that I was telling you. This is where people get all pissed off. They're like, oh, shit, now it's doing where I thought it was going to go in the first place. Just tell me when you want me to stop and place a trade. And I'll get rid of that line.
So these are all low volume, which is worrisome.
Correct.
So you wouldn't think it would be like, stop, let's do a short here then. Because here, at least in my eye, we're approaching the old trend line down.
Correct.
Oh, you didn't give me a sell. Yeah.
I can draw it back on there if you want.
Oh, no, I just was saying take a sell there, pause it and sell.
So this is actually interesting because see the time you're at? You're a little bit past lunchtime. See how the difference between 6 a.m. to your sweet spot is 8 to 10. So you had all this movement here during that.
And now you're saying
this is now people have gone home for the day, and this is the computers trading with themselves,
which tends to be more horizontal.
Very much so. And then it'll kick back in at 7 p.m. at night when the Asian market kicks in, roughly around that time. But you gambled and you won here because you're making money.
I thought I was down 17. Oh, no, they're on the 56.
If I take the trade right now, you're going to definitely be up.
Yeah, I see what you mean.
And close the position. Now you're at even.
Yeah, I see.
Now you're making some money. Now greed's kicking in. Now you're really making some money.
All right, sell
it. Sell it, flatten. All right, you made $123.50. Very good. Now you know why I feel like a crack addict. So that you've experienced a little bit of what I call, it's very good for you to practice with this because even though it's not real money, it does simulate the environment very well. And I hope you experienced the sort of storm of thinking that happens of what should I do, which way should I go, that kind of stuff.
Yeah.
You have to
learn. What's happening?
That's one of the most difficult parts of trading is learn to make those split-second decisions as to what you want to do. It's very helpful if you've defined a strategy in advance and stick to that strategy, because then a lot of that feeling of I don't know what to do isn't there because you know what to do. You have a plan, kind of a thing. And then just stick with the rules to your plan and you'll be fine. Make sense?
Yeah.
Okay. I think that's all I wanted to cover today, unless you have any questions. And then next week we'll cover setting up your brokerage account and some business practices like best practices that I use that I think would be helpful for you when you get all set up. And then you're ready to go.
Sweet.
Fund it with a little bit of money and play with it, or don't fund it at all and play with the simulators for a while until you are comfortable, that'd be my recommendation. Open a free trading view account. I made 2 little documents for you here, and they will show you how to set up TradingView and also how to use this replay tool.
TradeView is how I'll do the analysis, and then through a connected account is where I'll execute.
Exactly.
But that's all happens through TradeView, just like
I'll go through all that next week when I show you how to set up your account and where you select the brokerage accounts and all that good stuff.
I don't need another software other than TradeView here.
You do not. So literally you can get off the call, download a copy onto your computer and start to fart around with it and play and do exactly what we just did here, where you're just learning how to trade. And there's some really nice indicators, like there's one that I like all the time. Where is it? This auto trend line indicator. This guy updates in real time. And you can set how sensitive it is and stuff, but like I can speed this up a little bit. Go like
those. Now those dotted lines are...
They're the trend lines. It automatically draws them for you.
Oh, I see. From the top, I got it.
Now this would be... What would I be in this one? It's a little wide.
Going super.
I might tighten it up a little bit, but right now the trend looks like down. And you would stay down until it violates the trend.
And sorry, you were saying about taking more than one position. Is it that if you're trading the actual security, you can take more than one position as long as it's in the same direction?
Correct.
Right.
Yeah.
So I could keep hitting sell over and over again.
You can't do buy and a sell and a buy and a sell.
You can increase your position in the same direction, but you can't hedge it.
Because having a simultaneous position in each direction is called hedging. The big boys can do that, but you can't as an individual retail trader. So here the trend switched to up. It's following the trend line for you. So that's a real nice indicator somebody wrote. and you can just watch it go.
And this is over weeks now.
This is a 15-minute chart. Here's 7 in the morning. Oh, that's 7 in the evening, sorry. And then here, so here you're in a really nice uptrend channel. If you're going over a longer time period, you can just stay along as long as it stays in that channel until it violates the trend line.
The fact that trend line just compressed,
it's automatically adjusting.
The fact that it did shift, like right here, boom, it's compressing. Yeah. Does that mean it's
thinking about something else?
Yeah.
What it means. So now it's really.
And there you go, start breaking them.
It just broke out. You would either exit the trade or trade in the opposite direction. But I would wait until the trend established itself, because you get a lot of head fakes.
Wait, and this isn't established yet?
The trend is still up until the swing point swings back to the downside. You'll see it. Okay, so now see it sideways. That's why you got to practice this. Now, okay, now it's definitely sideways. Now, when that top line starts to point down, that's when I would think about going short again.
But like you wouldn't be doing like these mega trend lines and then doing shorter ones and trying to.
Not unless you want to torture yourself. Yeah, play with it. The experience will be very helpful to you, because your mind will go through all the rat traps. Okay, here it broke the upward leaning trend line. So here I would be thinking about taking a short. Okay, but I still want that top line to go swing down.
Wow. And like, why hasn't it, like, why didn't that trend line, that bottom trend line shift? Isn't there now much lower lows?
This is a swing point right here. This is a swing point right here. And this is a swing point. So you notice these are still all parallel there. It just started to change to the downside. Now it's going to go down hard.
But why hasn't the bottom trend line shifted? I don't understand.
Because that was an upward trend. It's not going to shift until the trend shifts to the downside. It takes bars in order for that to happen. I see. And you can set that sensitivity. So if you want it more sensitive, you can adjust that. But right now, I just did the default settings, which are very generous. Make sense?
Yeah, it's the denominator. So it's like how many bars of change, how many bars in one direction.
The setting here, it's looking at 50 bars. So if I change that to like, let's say I change that to 15 bars, it's going to get a lot tighter. It's going to change more frequently. Still in an uptrend, definitely in an uptrend now.
Are there shortcut keys for buy and sell?
Yes. I don't remember what they are, but there are. Just go like on Perplexity or Google and say, what are the shortcut keys for view, and it'll tell you.
But you usually use mouse clicks?
I use mouse clicks. Forces me to think.
Got it.
You can get pretty excited and pretty emotional while you're doing this. So I've learned these little mental tricks. Like I sit there, I'll hover over the button and go, should I do this? Kind of thing.
Yeah. And how many trades do you do per day then usually?
It depends on the day. I might do 4 or 5 in a week, and it depends on the day. Like Tuesday.
Only 4 to 5.
I've noticed
actually hitting buy and sell 4 or 5 times.
It depends on what news is happening. Let me show you this one.
I was expecting over that too, because you're saying from 8 a.m. to 10 a.m. and you're saying on average you're just doing 1 a day between those 2 hours.
1 or 2 a day, yeah. Because I'm trading either a 1 hour or 4 hour time frame, so I don't get that many to begin with, because I'm trading a much bigger time frame. This is a website called Forex Factory. It tells me what all the news is going to be for the week. The red folders are the ones that could have some impact on price. Yellow is not neutral. A big deal. And gray is a bank holiday, so nothing happens there. So this is actually a slow week. We don't have any, and it tells you which currency it affects. Okay. So the only news we got that of any importance this week is 9 a.m. What happened 9 a.m. today. Is today Monday or Tuesday? No, at 9 a.m. tomorrow. Sorry. We have an ISM services PMI number, and if you click on this folder, it tells you what that is.
Your view is to not trade on news, right?
Correct. This is an exception to the rule, but most news happens either late at night or right around 7:30. Thursday, there's a bunch of stuff. England's going to set their interest rate. This one always rocks the market, the unemployment claims on Thursday. for the US. So I don't even start trading until 7:45, usually 7:45, 8 o'clock, because I want to see what this does to price. Exactly.
Well, if I need, because of commuting, etc., if I couldn't start until 8:45 or 9, is that prohibitive for this?
No, they have a very good mobile app for this, for TradingView. It's
Yeah.
excellent. So you saw me showing it to you when we were at the thing last week, right? Just on my phone. The only advice I'd give you is if you're limited in time like that, and maybe you want to use a bigger time frame to trade in, then you're not going to be able to sit in front of your screen and watch every 5 minute or 15-minute bar go by. Maybe a 30-minute or a 1 hour bar might be a more appropriate time frame for you to trade in,
Yeah.
or even trade the 4 hour like me. The reason I've been trading the 1 hour and the 4 hours, I'm just like, I'm tired and there's less going on and it's easier for me to make a decision. The other thing that's important about the time frames is the bigger the time frame, the stronger the move, right?
Because it's basically compresses the trend, right?
Correct. So I can make you, if I hit a good trade, I'll make more pips in a bigger time frame than I would in a smaller time frame.
Yeah.
Now, if you want lots of action, you go down to a 5 minute or a 3 minute chart, you're going to be getting all kinds of signals like crazy. One of the things physically I didn't tell you is you do physically have the reaction, the fight and flight reaction. So your body is releasing adrenaline when you're trading and dopamine. So it's not unusual for people to trade and then feel like really tired afterwards. Your metabolism is just going up and down like crazy. Just be aware of that. Fitness is a big part of my trading regime. So I work out in the morning, I go for a long walk before I trade, so my body is exhausted and it offsets the dopamine adrenaline flurry there for me. And I've just learned that over time. I used to go crazy and try to trade all day and all night. Now it's nuts. But everybody goes through that. You just find your groove. Once you get your groove, then it's cool. Then it doesn't affect you that much. And for me, it's 1 hour, 4 hour charts, sometimes 15 minutes if I'm bored and I want a little more possibilities, a little more opportunities.
Okay. And then we'll cover next week. You said the scripting thing too. Like, where do we put
I'll put Pine Script in there for you so you can see that. You can gin up any kind of indicator you want in there.
Yeah, definitely want to play with that.
Okay.
Sweet. Thank you, Bill.
All right, no problem. Good luck. Have a great day.
Thanks. Bye-bye.
See ya.